Welcome to the deep dive. Today we're tackling a really focused piece of wisdom. It's designed to cut through the noise, get straight to the point for you, the learner, especially if you value getting knowledge efficiently.
Exactly. We're digging into Mansi's Trading Tip 74. Now, it's pretty compact, just a short statement, but I think it could unlock some really key understandings about, navigating the financial world.
Right. So our goal here is to really explore the core of this tip, understand how its advice kind of shifts depending on your financial scale, your capital.
Yeah, and ultimately pull out some genuinely insightful ideas that can sharpen your understanding of financial strategy.
Let's get right to it then. So Mansi's tip basically states two things. First, small capital requires tremendous trading skills for meaningful gains.
Okay.
And second, large capital necessitates tremendous investment skills for protection and growth.
What immediately jumps out, I think, is that clear split.
Yeah.
Different skill sets emphasized depending on the capital you're working with.
Totally. It suggests the playbook for someone, say, just starting out, looks really quite different from someone who's managing, well, more substantial wealth.
Definitely.
So let's break down that first part. Small capital. Now, small capital is, it's relative, isn't it? What's small for one person might be pretty significant for another.
Sure. Yeah.
So instead of fixing on a number, let's think about the principle. Why does this tip specifically highlight the need for tremendous trading skills when you're starting with less?
Well, I think the operative word there is meaningful. When you begin with a smaller amount, getting returns that really impact your financial life, well, that often means chasing opportunities with higher potential percentage gains.
Right. You need bigger swings, relatively speaking.
Exactly. And trading, with its shorter time frames focused on price fluctuations, it can offer that kind of leverage. But, and this is the key part, doing that successfully requires a really high degree of skill.
Skill in what, specifically?
In identifying those short-term opportunities. For one, executing them effectively. And, maybe most critically, managing the risk when you've got limited resources. That risk management piece is huge.
Okay, so when we talk about tremendous trading skills, what does that actually look like? Is it just, knowing when to buy low, sell high?
Oh, it's much more than that.
Yeah.
I mean, basic stuff might be recognizing simple chart patterns, sure.
Yeah.
But a tremendous skill level. That probably involves like a deep grasp of market dynamics, how different technical indicators work together, their limits in different markets, and having a statistically solid trading strategy, something you've maybe developed through rigorous backtesting. And crucially, an almost obsessive focus on risk management.
Like what?
Like setting tight stop losses, understanding position sizing relative to your total capital. That's vital. And having the discipline, the sheer discipline to stick to your plan even when things get emotional or scary.
Yeah, that psychology part is tough. And what about that phrase, meaningful money, when you're starting small? Because even a great percentage gain on, say, $1,000 isn't life-changing money in absolute terms, is it?
You're right. It often isn't in absolute dollars initially.
Yeah.
Meaningful here, I think, often refers to a return that represents significant progress towards your goals. It might not be a huge number itself, but it's building momentum.
So compounding smaller wins.
Yeah, compounding smaller wins. Or maybe strategically taking calculated risks on higher potential trades to try and scale up that capital base more quickly. The focus is often on accelerating growth from that smaller starting point.
Makes sense.
And there's a psychological aspect too,
Yeah.
Even those smaller, consistent wins, they build confidence, they reinforce good habits. That's crucial for the long haul.
Okay, good point. Let's pivot then to the second part. Large capital. Again, we're talking a more substantial amount. Let's not get bogged down in exact figures. Here, the tip stresses tremendous investment skills for protection and growth. What's the big shift here compared to small capital?
Well, with larger sums, the primary goal often shifts, doesn't it? It moves away from just aggressive growth towards, well, first, preserving that wealth, and then achieving sustainable long-term returns on top of that.
So protecting what you have becomes a major priority.
Exactly. And investment skills here usually mean a much longer time horizon. Think strategic asset allocation, carefully spreading capital across different asset classes, stocks, bonds, maybe real estate, alternatives.
Diversification.
Yeah, diversification to try and optimize those risk-adjusted returns over time. It's about building a portfolio that's resilient, that can hopefully weather different economic storms.
So it's less about those quick tactical trades we talked about.
Right.
More about the big picture, the long-term strategy.
Absolutely. Diversification is really a cornerstone of protecting significant capital. And those tremendous investment skills also cover things like a deep understanding of macroeconomic trends, the long-term fundamentals of industries, of companies,
So proper research.
proper research, yeah, and the ability to make informed decisions about where to put that capital for steady growth, but without taking on excessive risk. It's about compounding returns steadily, strategically, over years, maybe even decades.
And does that include other things too, like taxes?
Oh, definitely. Considerations like tax efficiency become much more important with larger sums, maybe even estate planning, depending on the scale.
Okay. Now, the tip specifically mentions both protection and growth for large capital. Why is that protection part so critical when you have more assets? It seems obvious, but let's unpack it.
Well, look, when you've managed to accumulate a substantial amount of wealth, the potential impact of significant losses is just much, much greater. Protecting that capital base ensures your long-term financial security.
Right. Keeps the foundation solid.
It allows you to meet future goals, maintain your lifestyle. I mean, a big drawdown and a large portfolio can take a very, very long time to recover from, sometimes years. The impact can be huge.
So while growth is still the goal.
Growth is still important, yes.
Yeah.
You need it to outpace inflation, maybe build a legacy, but it's often pursued with a more measured, a more risk-conscious approach compared to someone maybe swinging for the fences with limited funds.
This brings up a really interesting point. Mansi's tip seems to draw a pretty clear line between trading skills and investment skills. But, I mean, are they totally separate things, mutually exclusive? Can someone be good at both?
That's a great question. They're not strictly mutually exclusive, no, but excelling in both often requires, well, different mindsets, different time commitments, and pretty specialized knowledge for each.
So it's possible, but maybe not common.
Right. Someone could certainly be a skilled short-term trader and also have the knack for sound long-term investing. But it's probably more common for people to specialize, you know? The intensity, the rapid decisions needed for effective trading, that can feel quite different from the patience, the deep research, the long-term view that drives successful investing.
Like different sports almost.
Sort of, yeah. Maybe think of a decathlete. They need to be good at lots of things, but they might not beat the specialist sprinter or the specialist shot putter in their individual events.
Okay, that makes sense. So if we step back now and look at the big picture, what's the fundamental truth? What core idea about finance might this simple tip be pointing towards?
At its heart, I think this tip really underscores the critical need for alignment. Alignment between your resources, your capital, in this case, and the strategies you use to hit your financial goals.
So matching the tool to the job.
Precisely.
Yeah.
It emphasizes that a one-size-fits-all approach just doesn't cut it in finance. Your starting point really shapes the most effective path forward and, crucially, the skills you need to develop.
And maybe something about risk, too.
Absolutely. It subtly points to that risk-reward spectrum. Chasing potentially high returns with limited capital often means taking on more risk, right? Which demands really high skill to manage effectively. Conversely, preserving substantial capital often involves a more risk-averse approach, focusing on that steady, sustainable growth. It's about finding the right balance for your situation.
Okay, so let's bring this back to you, the learner. You're focused on gaining valuable knowledge efficiently. How can this really concise tip inform your understanding, regardless of where you are right now with capital? What's the immediate takeaway for you?
Well, what's really insightful, I think, is that this tip gives you a framework, a way to understand the different approaches needed at different stages. Even if you're currently working with, say, a smaller amount, just recognizing that generating meaningful money might require strong trading skills can help focus your learning.
So you know what to prioritize.
Exactly. You might prioritize understanding technical analysis or risk management techniques specifically for smaller accounts or the psychology of active trading. But on the other hand,
Yes.
if you envision a future where you're managing more substantial capital, well, then understanding the principles of long-term investing, strategic asset allocation, wealth preservation, that becomes crucial knowledge to start acquiring now.
So it's about looking ahead, preparing for different scenarios.
Yeah, preparing for potentially different financial landscapes down the road.
It's like a mental model, really, isn't it? Even though it's brief, it makes you think about your own path, your own trajectory, and the skills that are going to be most valuable at different points along that path. It definitely raises some key questions for your own learning journey, like what kind of skills are most relevant for you right now and for your future goals? Are you more drawn to the fast pace of trading or the more strategic long game of investing?
Precisely. This simple tip really acts as a catalyst, I think, A prompt for deeper thought about your personal financial path and the specific skills you'll need to build to navigate it successfully.
Okay, so let's try and recap the essential insights from our deep dive into Mansi's Trading Tip 74. We've unpacked this idea that starting smaller often means needing tremendous trading skills to chase those faster, meaningful gains.
Right, which requires really diligent risk management.
And conversely, managing larger capital shifts the focus. It demands tremendous investment skills geared towards protecting and steadily growing that wealth, using longer-term strategies like diversification and strategic allocation.
And we've highlighted that while, trading and investing skills aren't totally separate worlds, they do usually require different focuses, different time horizons, different expertise.
Yeah.
Ultimately, Mansi's tip really hammers home that fundamental principle. You've got to align your strategies with your resources and your specific goals.
So here's a final thought for you, the learner, to maybe mull over. Mansi's Trading Tip 74 really shines a light on the fact that the financial world isn't, one size fits all.
Definitely not.
Whether you're just starting out, aiming for big growth, or you're already managing substantial assets and focusing on preservation and steady expansion, understanding the different kinds of tremendous skills needed at each stage is just paramount.
It really is.
So maybe think about what those skills truly mean in your specific context right now and looking forward. And what are some actionable steps, even small ones, you could take today to start cultivating them wherever you happen to be on your financial path right now?